three strategies which have worked for me. The first one being trading penny stocks on uptrend or on news. When I'm going for this strategy, I am looking for a percentage return of 5% and above. And these trades are usually overnight to very short term trades. I try to find these stocks based on the market movers in some of the market mover sites. Most of you would be following different websites. So I usually follow this website and I go for aftermarket trading. Under this, I try to follow those stocks after 4:30, the stocks which are having high percentage change. And among the high percentage change, I look for the stocks. I basically sort the stocks in ascending order of price. So if you see here, I have sorted with this, and there are the stocks which are here. Yeah, it's starting from CTRM and it goes down up to Tesla. Among these, the ones which are above 0.50, I since this tool gives the result of stocks traded in US market, and I'm looking at aftermarket. So I'm looking for stocks which are traded in US market, and I would be looking to hold these stocks either overnight or for 1 day, 2 day, and expect a gain at least 5%. When I say at least, I am using this word intentionally because it can go 10%, 50%, 100%, 200%, depending on how it opens next day, how it's traded during the market hours next day. So the potential is big here, but at the same time, since it's risky, I follow this only for very short term, just overnight or a day. I mostly try to buy the stock in aftermarket. I start monitoring from 5 o'clock to 7 o'clock. Between these 2 hours, it gives a much better picture of, in some cases it happens that they are pumped or whatever be the case. By around 5 6 we start getting the list of stocks which are uh, traded in high volumes in the aftermarket and has a potential to close on that day by around 8 o'clock on a higher, or uh, most probably give a gap up opening on the next day. And if it gives a gap up opening on the next day, which means the price at which I bought today before closing of the trading, I'm already positive. And if it gives a gap up opening, I make sure that I set a target price as well as stop loss. So I'm okay to take a small stop loss. If my stop loss hits small, I'm okay to take small loss, but also have a expectation of making profit in the pre-market itself. While when once the pre-market trading opens, and if it gives a gap up opening, it's at least 10 to 20% higher. It all depends on the stock price. What would be my target price that I analyze, and based on the analysis I set the target price. If it doesn't execute in the pre-market hour, I still hold and see how it trades during the market hours. If it opens high, then I try to sell at the market open itself. If it drops and then it starts going up, I make sure that I try to exit at a price which is higher than my buy price, which means I try to exit at a minimum profit and then buy back again once it drops. The reason for doing this is, in most of the cases which I have observed, that if it drops at the initial half an hour to 1 hour, you could see that the stock then tries to gain and it trades higher. As I mentioned that uh, this is a risky um, approach which I am saying. The trend which it will take during the market hours, it all depends on how strong the news was. If the news was positive, then obviously the stock would go up. Uh, but if the news was not that strong, it depends at what price I buy. If I had bought higher and it goes down during the market hours, it could continue going down. So my stop loss helps in exiting at a less loss, and limit price helps to make profit that I expected out of it. Since most of you who are doing day trades would be much more familiar with this, and as I mentioned that I don't monitor the stocks much during the trading hours. If I am keeping the stocks for overnight, I rely on my analysis and my target price. During the times that I get free from my office meetings, I keep a check on how the stock is doing. So based on that, I do keep changing my sell limits and stop limits. This strategy is profitable, but it also gives small losses. Overall, when I see my portfolio with this strategy has also grown, but it's a riskier way, and I try to take less quantity positions with this strategy because it's less profitable to me and more riskier. So any questions on this strategy before I go to my second and third?
Kamal, I just have one question to you on this. You normally check out scripts which are the most active one or the most gainers?
Uh, Most gainer and volume both.
Most, that means you will look at the most active. In that, you will check the highest percentage and then you check the volume.
Yes, that's right.
You
And
don't check the middle column, which is of the most gainers.
so the most gainers, actually, if you see uh, this, it gives in terms of price. The difference between most active
Yes,
table and the gainer table is the gainer table, it gives in terms of price, and active gives both in terms of volume as well as a percentage. So that's why I prefer more
all right.
active table. I do look at this
Active
table.
active table will also mean gives you volume, so it gives you liquidity to enter in and enter out at ease.
Yes, that's right.
All
And
right.
yeah, and I missed one thing over here, that once I see here, then the next step is I would open a stock and I see how it has traded in the after hours, how it traded during the trading hours, and how it had opened. Once I feel little confident that yes, this looks to be promising, then I open the stock in Yahoo Finance. And reason being, Yahoo Finance gives the real time quotes even in post market. So if we take EXPR, since Vivek sir and many of you had recommended, I started following the stocks on Yahoo Finance as well during the market hours and also in aftermarket. The two platforms which I see show aftermarket price real time as one is Yahoo Finance and another is Webull. So the quotes uh, in aftermarket price it shows here. You could see the real time price here and then set your buy limit orders on whichever platform you. I think aftermarket, if you are trading, Questrade allows you to trade up to 5:30 p.m. and IBKR allows you to trade up to 8 p.m. So if I would have to buy a stock on Quested, I try to buy between 5 to 5:30, which I used to do before. And now since I have started using IBKR, I try to by after 5:30. Yes, gainers include the stocks which have gained, and then there is decliners if you are looking for stocks which have dropped. And the reason why I like this is because it gives you aftermarket, pre-market as well, and during the market hours, it gives the market movers. Uh, Only thing is it has delayed quotes, as it might be showing somewhere. Um, it has delayed quotes, so if you are using any platform where you have subscribed for real-time quotes, maybe you could set up your screeners to give real-time quotes. Uh, for now, the platforms which I use are also giving delayed quotes. That's why I find this really helpful to me. And then I use Yahoo for seeing the real-time quotes before placing my order. Um, so this is for the first category of mm, the strategy, where I keep for short term, expect less profit, and also expect it could give little loss. Now the second strategy which I
Kamal, just one before this.
yeah
Here, we're taking most active ones. Is this actually news-based active, or these are just the active ones for the day?
um, this it could be uh, because it was traded during the day and then it extended during post market. It could be
So
that
that's
there
why
was
it's doing.
yeah
Yeah.
it could
That
also
means
be
this is not news-based. So this will not be news-based trading.
so I was going to say next point that it could
Sorry. Sorry,
it
sorry, 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 sorry.
uh,
Carry on.
yeah, no problem. So
My apologies.
no problem. So I'll just repeat that. First, it could be that it was traded good during the market hour and then it extended in the post market. Second is which mostly happens is that at 4 or after 4, there's some news released which uh, gives a gap up after market. So the news, many times we see the news is released from 4 p.m. It could be released just as the market closed 4:35. So after market, when the news is released, the stock might uh, it might give a gap up and then it starts trading higher. And also it could also be that the stock is pumped. Which I was going to cover in my second category. Uh, the stock is intentionally bought by someone so that the stock price goes up and then it starts, and then retail traders get in or the post market traders get in. So it could be either of these three. The screen freezes once market closes, right? The market movers, uh, market mover uh, remains the same. If you are looking in the aftermarket, this table, these tables will they get updated based on how it's trading in the aftermarket. So this strategy which I'm mentioning is uh, overnight trading. You could say I mostly buy in aftermarket and try to make gain on how it opens next day or how it trades next day, and mostly try to exit if a stock is has opened has given a gap up opening and then during the market it traded good and it's about to close, then just before the close of market I try to exit because it's almost 24 hours that the stock is trading actively, and if the news is not that strong, it's less likely that next day it will open higher. So because on day one in the aftermarket, uh, I enter and day two is the gap up opening. So I have made the gain which I wanted from it. If not in the pre-market than in during the market. So I try to exit just before the market closes. It could well happen that on the day two after market the stock is doing good, and on day three pre-market it might be even higher. But I'm not extending that much. Um, I'm, you can say, satisfied with what I make gain in on the day two pre-market or during the market hour. Do you have any no trigger points are not generated by calculated or manipulative bookings? I don't have access to this information, so unfortunately I have not been able to figure out what could be a stage where it triggers a manipulative point, and that's the reason why I apply my third strategy, which I would be mentioning. Why I go for the third strategy, where I am not aware that any news is going to be released, but still I'm able to make gain. As their market capital is sometimes trigger may happen at smaller quantities too, right? Yes, it can happen at smaller quantities as well. But I usually go for the trades which are traded in higher volume, which means um, it gives me opportunity to exit at a profit or minimal loss uh, compared to the stock if I go which has less volume. I think this point Vivek sir had mentioned once, which I am noticing and practicing, and that's the reason I give preference to both change in percentage as well as volume. Vivek sir, if you would like to add something to that point.
No, that is very important. I mean, both of us have slightly different styles of trading. I am, I made it vocally known to everybody. I'm not a very fan of penny stocks, though I do see potential in it, right? But I always look at a trade that if I have to enter a trade, it should have sufficient volume for me to trade and come in and enter the stock and exit the stock at my free will. If the volume is not there, like if in some of the cases you will just find a volume of few hundred shares only traded in the whole day. Now in that case, even if you pick up 100 shares and the volume is only 100 shares or 200 shares, you will not be able to sell the stock as per your will. So which is why volume in the share is very important. That indicates the keenness of the market participants to trade in that script or to trade in that stock. Similarly, I would also look at the percentage gain. Now, what is the percentage gain has been? Has it been phenomenally, exceptionally reason why on one specific date or over a period of 2 or 3 days? If it's showing me one day, it could extend to the next day also. Because if a share has spiked up on day one, that means there is something in it which is the reason why it's spiking up. So possibly day two could be a good day also. But if it has been working for 3 consecutive days, that means it could be reaching an exhaustion history of the share before entering the connection, the script. Am I right, Kamal?
Yes, that's absolutely correct, and I totally agree with that. So
Hmm.
I mentioned about a stock which doesn't have a strong news, which I exit towards the end of the um, market closure on day two. On the other case, as Vivek sir mentioned, if a stock has a good news, then even I consider holding it. It depends on how confident you feel about the news and how market is taking. Okay. So that was about category one or strategy one. The strategy two, which has worked over 80% of the time for me, and I am specifically mentioning, which means that 20% times it has failed, but it gives me at least, again, I am using at least 20% gains, which means 20% and above gain I'm able to make with strategy two, which is, again, if you are using the same site for strategy two, I'll continue explaining from here. My strategy two is I watch for the stocks which are from 0.50 to 0.95. So my focus here is the stock price. The stocks which are ranging from 0.50 to 0.95 or 0.96 in this case zone. Um, Now on these stocks, when the stocks are when the stock is traded from 0.50 to 0.70, I'm not entering them. I'm watching them. This I do most of the days in the aftermarket because these stocks I am planning to enter for short to medium term. When I say short to medium term, for me, short term is like 1 to 2 weeks. So, and medium term could be about a month or even 2 months. I enter these stocks once the stock starts entering 0.70 range. I'm monitoring them I'm basically watching them when they started trading in 0.50s, 0.60s, and once it touches 0.70s, I see how it has traded to reach 0.70. So basically, I'm not buying them immediately. I'm watching them for some time. It could be a day, 2 days, a week, or it could be more than a week. And I see how the stock is being traded, how how much is the volume on that stock, and obviously since it's in my watch list, I do its analysis as in um, how much it can go. I like the analysis for the stocks in my watch list. I usually see how it has traded about a year at least, and then also see 2 year, 5 year. So it gives an idea to me on how the stock was previously about a year before or 2 year before, and due to COVID or whatever reason, it fell down and it went under $1 or under 0.50, 0.60, and now it is recovering. It is uh, trying to move up. This stock gives a very close relation of what I am saying, but maybe not the ideal stock. Maybe once I'm showing on the trading platform, I can explain better. So basically, I'm trying to make myself more confident on this stock based on its previous history and thinking that now it is trying to recover from being oversold position, come to its average value. And when I say average value, that average value could be much higher than $1, but now it is still under 0.70, and maybe the company has started doing good or there is positive news which is making the stock to start moving on uptrend. And this observation of stock taking uptrend, it's not the one criteria. um, After I see that this stock looks potential, do the analysis and then try to explore if there is any news from the company itself or if there is any news on the internet about that company. So uh, I basically try to gain a confidence in that stock that if I enter at 0.70, it is going to extend up to $1. Okay. And also there's one thing here why I am saying $1 is uh, since these are traded on New York Stock Exchange and Nasdaq, they have a requirement that the stocks should have bid price of $1. So in if the company is good, they would try to maintain their listing on the stock exchange. And if um, they try to do it by releasing some news which is positive about the company, and what that does is the retail investors or who would have had traded with these stocks, they are familiar and they get in. Along with that, if that fails, means if the news itself doesn't help the stock to reach $1, the stock is pushed by internal management itself. So or pumped I is the right word which is being used. So at least pumping will make sure that the stock will reach $1. And I try to take advantage of that by entering a stock around from 0.70 to 0.80. If I enter, my target is $1. If the stock reaches $1, it's well and good. So on a $0.70 stock or 70-cent stock, I'm making 20 or 30 cents. If I am not able to enter at 0.70, because it may happen that I may not be able to enter at 0.70, I I'm okay to enter from 0.70 to 0.85, meaning from 70 cents to 80 cents. I'm okay to enter with a view of another 15 cents to 30 cents profit on that stock, which in most cases it works out. That's why I say that about 80% I see the success rate. Uh, Even if the company financially may not be good and it's just pumped to reach $1, uh, I try to take advantage of that. The company wants to maintain its listing on the stock exchange, and somehow with positive news or with pumping it is going to reach $1. I try to make profit on that aspect of that particular company's stock. And that's why I say that I keep it for short term, because it's not necessary that uh, it is pumped today and tomorrow it will reach $1. It may reach up to 0.90, 0.95, 0.97 and not reach $1 and come down. Mm, so you would also observe that those stocks which don't reach $1, uh, there's another attempt to pump to make it reach $1. Uh, in most of the cases, the stock price touches $1. My set limit usually executes at $1, and I make the gain which I expected out of it. Uh, so this is for the stocks which I am not confident that this is a really potential stock for holding for long term. And uh, at the same time, I expect that the company management is going to make effort to make it reach at $1 and maintain listing on the stock exchanges. Am I making sense here? Any questions on this?
Hi Kamal, I have a question. Don't you check the company profile before going into the stock?
Uh, yes, as I mentioned that when I'm monitoring the stock, so first thing is getting the stock within this range, then doing the analysis, then going through the news on the company website, which also means that I am visiting company site and then seeing its news on the web. So I'm not rushing to buy this stock because I'm trying to hold this for short term. Uh, the first strategy which I mentioned was to enter that day itself to sell next day. So in some cases I might rush, but in this second case I need not rush, because uh, at max what might happen is I might not be able to buy at 0.70. I might be able to enter at 0.75, 0.80, 0.85. So that's fine for me. I might not get uh, around 20%. uh, I might not get 30%, but uh, close to 15% at least I can get.
Kamal, the same rule holds for stocks on TXV also, or only on Nasdaq and NSE?
uh, this requirement of bid price of $1 is only for stocks on NYSE and Nasdaq. There's a
Ah,
good correlation which could apply for stocks in Canadian market. If the stock is dual listed, if it's a Canadian stock and it's listed on New York Stock Exchange, then you, if the stock on NYSE is pumped to reach $1, you would see a spike on the stock which is listed either on TSXV or TSX. So uh, even though you are not trading on US market, you could still benefit by buying a penny stock which is
All,
on the TSXV or TSX.
all right. Thank you.
So you could look for stocks which are under $1 on TSX or TSXV, and they are also listed on NYSE or Nasdaq. Um, you could enter the with the same strategy on the Canadian stock. Any questions on this one? If not, then let's go to the third strategy, which is most profitable. And when I say most profitable, it also means that I am okay to hold them from short term to long term and expect higher gains also. Since I'm preferring to hold them for longer term, I'm taking very less risk. That's why I have analyzed the company and feel it's less risky, and even if it goes down, I'm fine because I'm planning to hold it for long term. So my focus would be on selling at my target price rather than when would I sell. For these stocks, it's easy to analyze. We have more time to analyze because I need not check what is its price during trading hours before entering, and I spend enough time in post market hours on the weekends to analyze them and gain confidence before entering. Now, as there were questions as well, so I think this would cover how do I find those stocks, and this applies for the stocks which I mentioned in strategy 1 and strategy 2, but more specifically it would be more evident in the strategy 3. That's why I kept it up to this point. So what I usually do is, if you are on, I guess most of you are now familiar with TradingView. So on TradingView, if you go under screeners, under stocks screeners, there are different categories here. Maybe some of you would have explored these and some of you not. So the one which I usually see is this performance. And if you click without my filters, the performance, if you click on performance, you will see the stock price change 1 minute, 5 minute, 15 minutes, how much the price has changed on that day, its weekly performance, monthly, 3 months, 6 months. So you could track the stock performance over different period of time. Okay. Now, how I use this feature is, just please stop me anytime if I'm not making any sense, or if anything you feel that I should explain again. Okay. So under performance, some of the filters here, thanks to Vivek sir, he had taught us in our previous sessions, which has helped me to include in this performance columns, which has increased my success rate. I, I I would like to say thanks to Vivek sir for this. So I was saying, on this stock screeners, eh, under performance, you could see how the stock has performed over different periods of time. So on this, I have added additional filters, which is last, volume, and 52-week low, 52-week high, Bollinger Band up, Williams R, RSI, and also you would be having CCI. Now, how do we add this? If you're not familiar with this platform and you want to understand how you could add it, you just need to click on these three dots and add any of the indicators which you would like to add to your to the default performance indicators that it has for monitoring the stock performance. So on this, I what I usually do is I see how the stock has performed over a year. So it's yearly performance. And unlike most of you or many of you, I see the stock which has performed the worst, the stock which has uh, dropped the most. There could be various reasons, but my analysis starts from there. It's not that I end there; it starts from there. The ones which have dropped the most over a year, then over 6 months, and in when I'm switching, I try to keep a note. The one which had dropped the most during the year, it may not have dropped the most in 6 months. As you could notice that if I see the stock which has dropped in the most in 6 months is SIQ, whereas the one which has dropped the most during the year was SWEL. So I I gradually see which is the stock that has recently dropped the most and which has impacted its overall performance in 1 month, 3 months, 6 months. And the focus on giving, uh, if I focus on the stock which has performed the worst the most in a year, and then if I look further, it clearly gives a picture whether the stock is now trying to become better or it is still falling further. This is just with a layman view. I have not even come to the indicators Williams R and CCI. Just with a layman view, you can see the in last, if we talk about SWEL, in last 1 week, it has dropped 7%, in 1 month 14%, in 3 months 14%, whereas between 3 months to 6 months it had dropped 60%, which means there was a huge drop here. Um, so this gives a little impression that the stock had dropped a lot over here, but now it's still on downtrend, but it's kind of um becoming better. It's not that it has dropped very recently and then uh, it is at this much percentage down over a year. And the reason why I try to gauge this is if a stock has dropped a lot over 3 months and 6 months back, then there's highly likely that now it is in oversold position and it will it is almost near its bottom and it might start reversing. And one very key indicator which I didn't mention and now I'm mentioning is over here. If you see the last price, as Vivek sir also I think uses, which after observation I noticed that is giving the results which are similar to what I used to manually go through this and then come up, is the last price below or equal lower Bollinger Bands price. If it is below or equal, if you filter with your last price value to below or equal lower Bollinger Band, and this volume I keep it at least minimum 50k, and if you sort with this filter or with this indicator, uh, it is giving me the stocks which are like almost ready to enter. Okay, and I'll just sort it. These stock last price values, if you see, they are very small, and I usually have a means my personal preference of not going into stocks which are less than less than 0.015. I I usually buy the stocks on TSX and TSXV, which are means prefer to buy the stocks which are above 0.40. I'm not talking about TSX and TSXV. So the stocks which are above 0.40 is the preference, and I see that they are less riskier, and if I enter, I have high success rate. In some cases, um, if I have confidence on the company, then I try to go little lower, and this is little backward step which I am saying. So just for everyone's understanding, I will, for this discussion, I'll focus on stocks which are above 0.40 on TSX and TSXV. Okay, so if we, with this filter, this is the result that we have got, and since my preference is of stocks from 0.40, for this discussion I'm saying, though I have shared in group the stocks which I have bought at lower, but for some beginner, if he or she wants to start trading, that's why I'm keeping 0.40 as the benchmark. Okay, so I see that this has come up in the screener with the filter which I have. So at 0.40, the next thing which I see is its 52-week high. It is currently at 0.44. Its 52-week high is $2, and the this BB up is Bollinger up, which is indicating that if I enter now at 0.44, and I can expect it to sell at a target price of 0.63, which will be my first target, and $2 could be the best case target. The Williams R is minus 91, RSI is close to 40, which is a little higher, but is still fine, as CCI is lower than minus 150. Now, these indicators are giving me a very good hint that this BNKR is looking good to consider to have it in the watch list. So at this stage, it is looking good to take it to watch list. I have not even taken to watch list. For taking to watch list, the next step which I take is I open the chart. Though the indicators are giving me hint that it is looking good to take it to watch list and then buy. So the next step is analysis on the chart. It's exactly the same that we do every week on this session. So if you see on the chart, we were seeing its 52-week peak as $2, which I try to figure out when did it touch $2, and it seems 1 year chart that $2 is somewhere at the start of no, so let's say that it had reached here, but it's almost like 2 years. If we compare to current price, it is currently at 0.40, and as indicator was in as the Bollinger Band up indicator in the screener was showing 0.63, as you can see on the chart as well, and RSI and Williams R, they are downward. So this is good to take it to watch list, but I would spend little more time on understanding about the company, its financials. There are news details here. It may, is there any recent news or anything that is impacting the company to be on this downtrend? I don't want to get into any stock which has the bad news, and then after I enter, there's another bad news and it drops further. If it happens, I do take action on how to mitigate that. But for now, I'm trying to make a decision that I don't want to buy a stock which might fall after I buy. So what I do is, if I am okay with this there's no risk in any of the news that it had recently, I'll take it to watch list, and I will watch this stock until it starts reversing. Means these indicators, Williams R and CCI, they are indicating that it's on downtrend. So I will take it to my watch list until it starts reversing. I I would not immediately enter this. Make sense? Or any questions here?
So Kamal, I have a question. So when you are saying reversing, it means that the both the charts downward should show a growth, like they should move upwards, right?
Yeah. So if you see this point or
Yeah,
this point,
yeah,
so it was down and then it moved up.
right.
So which means there was the next day it was up. Again it went down, but uh, on the next day it went up and then it continued up,
It's growing. Yeah,
right? So
right.
I'm also looking for this kind of point where I see that it has turned both on RSI, Williams R, and even CCI also you could see. And these are the same indicators that we are discussing every
Right.
weekend.
Right. And what's the frequency? Like when should I go back to see that the market is going? Like after a day or after 3 days, or like usually what you follow?
Right. So as I was saying that at this point, if I feel confident about the company and about the financials and all, and about the news, then I take this stock in my watch list. And
Right.
I have my watch list on my trading platforms and on Yahoo Finance. And um, since I have it in my watch list, whenever I get time during my working hours, if I get time, or if I don't get time during my working hours, after my working hours, next day if it is up, you would see that this RSI and Williams R, they would turn. So which is a indication that it is starting to reverse and could be a possible good time to enter.
Okay.
Okay,
Okay. Right.
right?
Thank you, Kamal. Thanks.
Vinit, if I may come in over here and add to what Kamal is saying, what
Right.
you can do is you can create your watch list on Yahoo Finance.
Okay.
It gives you an unlimited number of watch lists. You can create it over there,
Right.
and anytime during the day, even in our market hours or after market hours, even about 15 minutes prior to your dinner or supper,
Yeah.
open your Yahoo and just scan through the list and just watch each script in the chart form. In the chart, currently in trade view, you could not see more than two indicators. If you take Yahoo, I can go to three or four indicators also. I can add Bollinger Band, I can add RSI, Williams R, CCI, volumes, Ichimoku clouds, whatever I want.
Okay.
So that gives you all the indicators. Now
Yes.
you understand all the parameters that are there. Now
Gotcha.
Uh, Williams R and CCI are basically forward indicators. So minute they have turned upwards, it
Yeah.
gives you an indication that yes, there is a high probability that the stock will now start rising. It's again a probability.
Mm-hmm.
It's only because there is a chance it may go up for a reverse and come down. So then
Right.
you enter the proper stop losses.
Okay. Got it.
All right. Now
Yeah.
Bollinger Bands are like envelopes. The price has to trade. The stock has to trade between the Bollinger Bands. So if it is going out of the lower Bollinger Band, it will be pushed into the Bollinger Band zone. So that is why we look at the price when it is below or just equal to the lower Bollinger Band, because that is where the price will reverse and go up. Like what the price Kamal is currently showing you on screen, there are 3 candles in the center which are out of the lower Bollinger Band. And it has been pushed back into the Bollinger Band, maintained a steady rate, and then gone up.
Yeah.
And now when you see the last 2 candles, they were out of the upper Bollinger Band. They have been pushed down to come into the Bollinger Band. So they are like a boundary, like a unwritten law that the price has to be within the Bollinger Band.
Right.
That gives you an idea of how to trade,
True. Okay.
right?
Yeah. Yeah.
Just my 2 bits of, since you're talking about Williams, which is my pet subject. That's why I came inside.
Yes, sir.
No, no, that's really, yeah, that's really helpful, Mr. Bhatia.
Yeah, you're most welcome.
Thank you. Thank you so much.
Yes, sir. Your input
By
adds.
the way, your name is very close to my heart, so that's why I walked in.
And
I
is
love.
there any reason?
I have my brother who has the same name.
Oh my goodness! Wow. Thank you, Mr. Bhatia.
I prefer to be called Vivek.
No problem. Yeah.
Yeah,
Thank you.
welcome.
Yeah, great. Yeah, so means I'm just showing a snapshot of watch list. Please don't focus much on the stocks that are there in the watch list. If you want to, you may, but uh, the point here, what I'm trying to show is, after analysis, I added into the watch list, and as Vivek sir was mentioning, you could see much more indicators on the chart that is there on Yahoo Finance. And since it is real time for those who are watching during the market hours, it's even more beneficial even during market hours and after market hours, because the quotes here are real time, both for US market and Canadian market. For Canadian market, sometimes at the start of the market, during the initial 15 minutes to 30 minutes, you might not see the accurate values here, but if you see after 9:45 or better after 10 o'clock, then you would see the updated values. And from 10 to 4, I don't see any issues. Sometimes during initial 15 minutes, I see that the stocks which are on TSX and TSXV, their price changes may not be um, uh, most especially price change and price change percentage may not be accurate, but later on after 10 there is no issue as such. um, I'm not sure if uh, someone else has also observed, but that's my observation. And it here I think some time back Vivek sir has also mentioned that you could see average 3 months volume. Apart from volume, you could see its average 3 months volume, how um, it has traded during the day. It's 52-week range, and it has small chart as well, which also even if you don't open, you get to see how it overall traded during the day. So like for 80, you can see that it kept on growing. Means the market kept on uh, buying it. Okay, so
I mean, in the same thing, the second row, DYA, average volume is not even listed. If you go back, DYA, I think in DYA it is not even listed.
yes, I think I did back DYA. Sorry.
DYA was the name of the script. Symbol was DYA.
Yeah. So there's no
See,
vol.
there is no average volume at all. So you would be very careful in trading in such a stock. Though it has about 800,000 stocks on the last traded day. But the last day, 3 month average volume is zero. That means it's a recent listing. That means it's a recent listing.
Right. So it might be a new stock. I think Vivek was the one who was requesting for analysis for this, and I did try to open this, and if we try to see it,
No, you try keep a one day chart. You will see it immediately in one day chart. If it's less than 3 months, you will see a one day chart.
Yeah. Volume is 0 for 1 day.
5 day chart.
On 5 day, it is seems it was not traded
Or
on the
let's
last session.
Oh, I think just to add on to this, Kamal and Vivek said, this is Aditya. So sometimes what happens is there are certain stocks which are halted because the IROCC does checks in terms of internal trading happening. So sometimes it might be 2 days, 3 days, sometimes a week or so, wherein there is no trading that happens on.
Hi, Kamal.
Yeah.
This company is more onto
possibly. Yeah.
hydrogen and all those stuff that's gonna come. I mean, it's expected to be going better in the coming years. So I don't know whether there is a lot of insider buys. Or, I feel like this is one of the Canadian companies that might become like XBC, the ZBEC Corporation, which boomed in the last 1 year. So that's why I gave this ticker to you to see
Right.
if it's what are your thoughts on this.
Right. I was checking on mobile view, it was not giving, but on this laptop, it shows that it has traded about. It has been trading for quite some time. It's just that on the last trading session, as Aditya mentioned, that IRR or OC might have halted the trading. That's why we see volume 0, and that's why maybe it was not showing in the analysis. So um,
Possibly.
in terms of potential, yes, it could be a good stock. Maybe we will come to this for analysis in our stocks analysis part. Yeah. So continuing
We
with
should keep it.
continuing with what I was sharing. So once it is in my watch list, and whenever I get time, I again see how the stock has opened, how uh, means if it is in the watch list and I see that uh, it has had a drastic drop, or it is up, based on the chart analysis, if I have expected a tentative entry point and I see that it is reaching there, like for this ACST, it had a drastic drop here, and then it was in this channel for quite long time. It wasn't moving, so it was in my watch list when I think not this much, about 0.20s, yeah, around this time. And then when it had a jump around here, it gave a indication that yes, I could enter this because of its previous history. It was traded around, it had touched $4, and uh, other indicators, Williams R, CCI, were all in favor, so which gave a confidence to take position into this stock. Now, based on this indicators analysis and this information that this ACST specifically, you might search that it's also traded in US market and it's on TSXV as well, which means that this stock needs to reach $1 at least to maintain listing on, I think it's on NYSE if I'm not mistaken. And see, on this day it touched $1. Now after this, whether it will trade further or it will uh, go down, I am expecting based on its previous history and also following its news, I expect that if the company keeps releasing positive news, it can continue going further. So could keep though once you sell at $1, I could buy it again to keep it for the next target after $1 would be filling this gap. So these are some of the indicators which give me kind of confidence to take position for longer term. And one very important point also I would like to add here, which some of you might have noticed in my two trades which I shared in the group last week, was the volume. And if I take MIR, then maybe might be more relevant. Yeah, so in the point which I wanted to stress now was about volume. I mean the quantity that I would buy. So since these are penny stocks lower than 50 cents, if you want to see profit which is like significant, if you are a beginner um, and you are starting with $100, $200, it's totally fine. And I would like to add as well, if I had missed during the introduction, that when I started trading in Canadian market, my first account on Wealthsimple Trade was with $100, and now it has grown over 25K, which is not. Please don't misunderstand that it has grown that much. I have st- once I started with $100 and I figured out that I can make profits. I started adding more funds, uh, and have grown the portfolio over 50%, uh, which has made it to cross 25K. It's not just that, please don't misunderstand. The confidence that this is working and I can make more gains made me to keep on adding my investments or keep on increasing my investments and then grow those investments. Am I making sense? So on how to make a considerable gain by trading in these penny stocks, in this smaller valued stocks, is buying more quantity. The major difference that you will notice is if you are getting into a penny stock which is very promising, and if you buy in bigger quantity, the return that it gives you will be able to notice very easily. For example, let's just take this MIR, and if someone entered here on this day because it was on downtrend, based on the indicators, by this day you would see that it would show you oversold, and since it is oversold, or it's there in the watch list, and on the next day you see that it has moved up, you enter. Means I would say in my terms, I enter, and since I enter here, as uh, you can see, it is 0.245, and even my average was around that. So if you enter at, let's say, 0.25 and you hold it, a day comes like this, I'm not knowing what happened on this day. I am not even monitoring the news. Uh, but the previous history had given me confidence that there would be a day on this stock that it would spike. And since I have an average of 0.25, and previously it had a history of reaching 0.89, 0.69, I am not even expecting that much. I entered with minimum expectation of it touching upper Bollinger Band, but with the intent that I want to keep it long. So if it touches upper Bollinger Band, then I start seeing the next resistance levels at 0.42, 54, and liquidate some portion here and keep the rest for next higher targets. In this case, specifically talking about mid-Mera, I was on 11K quantity, means I had 11,000 shares, out of which I had kept 10K at a sell price which the upper Bollinger Band was indicating that time, and that's why I had exited around. That's why my order got executed at 0.29, but I still have 1K for the next targets. And if you calculate this from 0.25 to 0.29, it is just 4 cents. But if you have 10K quantity, it is $400. Uh, are you getting the math here? And since they
equal to almost over 20%.
Right. So my exit was at 20%, but I still made $400 on this that time $0.25 stock, and now which is 0.36. And if you're monitoring that day, obviously, if you get time, you are monitoring, then you could, if you exit at 0.50, which means you are at 100%. So if I invested, let's say, close to at 0.25, if I took 10K, which was like $2,500, and if I sell even 50% of them at or even 10% of them at double price, with 10% is like 1,000. So 1,000 shares, if I sell at double, this is giving me $250 as profit. This 1,000 shares at 0.25 if you buy, and if you sell at 0.50, that's 10% of the position is giving $250. Now, why I stressed much on the quantity, and I spoke on smaller amount or smaller investment, even in message I had mentioned, is when many of the beginners on the call and in our group, when they start, they feel what should be the initial investment amount. Should we start with 1,000, 5,000, 10,000? Based on my experience, I always say that since we are beginning something new, it's better to start with smaller quantity. That's how I started. That's how I learned initially to make mistakes, to lose few dollars, lesser dollars, and learn from them and apply the learnings which are working out on bigger amounts and then grow. So losing initially with smaller amounts, it's easy to recover, and that learning that it gives, it's more helpful to apply on bigger amounts and increase the gains. Vivek sir, would you like to add anything here?
Can you ask again, Kamal?
Yeah, I was saying that many beginners think what should be our initial investment amount, and they think that they should be investing at bigger amounts. So what I was saying is I have started with smaller amount, and that is what I recommend, to start with smaller amount, learn to make positive gains on those smaller amounts, and then gradually increase your investment.
Absolutely, I agree with you. I absolutely agree with you. Because as the market statements go, 99.9% of the people who enter the trading ring to lose money because they are not trained properly. They don't know the technicals. They don't know the art of trading. So best is to learn the art of trading with a very small amount. or start investing in scripts which you are consuming. So those are the companies which will remain in business for long. So if you invest in those companies, sit on stock if you want. The longer you sit on stock, the longer you will get paid in a princely manner. So learn to trade with a small amount, no issues. You can start trading with a very small amount also. $100 can also be a big amount for somebody. Trade with even less amount than that. Get the art of trading first before you put in your real money.
Any other further questions on penny stocks or the stock screeners?
Hi Kamal, this is Aditya. I got a question. So when you say that when you look at this stock screeners, right? So how does a Williams R or say a CCI 20 come into picture in this particular scenarios? Because you only mentioned about checking the weekly, monthly, yearly performances, right? So just wanted to check, when do you consider those as well, or is it just for your understanding that you just have them?
Yes, this performance are for reference, and for a reference of um, how the stock uh, has grown previously or has dropped previously. I mentioned about looking at the stocks which have dropped the most, and I I should have also mentioned about the stocks which have grown the most. So in the same filter, you just need to remove this. Mm, Value below or equal $4, and if you see its yearly performance, you would be seeing the stocks which have grown in past 1 year. And obviously, because I'm looking for penny stocks, so I sort with the last price. I actually it changes, so you keep a sort with the yearly performance with the one which has grown the highest, and then manually go through their stock prices. So if I see this, uh, now you might understand why I have been discussing about THRM in the group. Uh, if you are part of either a group 1 or group 2, you might have noticed me talking about THRM. So if you see its yearly performance, it has grown more than 3000 percentage. In 6 months, it has grown more than 5000 percentage, and currently is at 0.49. This gives a reference of how the stock has performed in past 1 year. And once I see there, then I come to chart, as I had mentioned, and then do the analysis on what would be the right entry point. And for that, I keep it in the watch list and keep monitoring. Did I answer your question, Aditya, or I went somewhere else?
You kind of, Kamal. So my question is more towards like, when are you going to consider like the Williams R and CCI 20, all those? Like you have those indicators as well, right, on your chart towards
Right,
it, right?
right. So on this performance screener, I start with this yearly performance of the stock, then 6 months, 3 year, 1 year, weekly. That is a reference for me, which gives a stock like this. But for entering, what should be the entry point? Once I have made up my mind that this stock looks promising, at least from the performance, then I start looking at the chart on how the stock has performed. And before even going to the chart, this table itself gives a hint on what I can expect on the chart. Because if you see at the, if I put change this to, no, I'll keep it here. So if you see at the last price, it's 0.49, and you see here Bollinger Band up, which is indicating that if I enter now around 0.50, I can still expect it to sell around 0.70. This is a reference. I have not gone to chart. Okay. And with this table itself, it gives that even if I buy at current price, I can still expect to sell at this price. Williams R is indicating neutral. It is minus 70, which means it can drop further if it is reaching minus 95, minus 100. That would be a better buy price, which means this Williams R is hinting that it's not a right time to buy. If we wait for some more time, we could get a better buy price. Same is with RSI, because RSI is 56 and CCI, since it is 48. For CCI, a value under 0, minus 50, minus 100, RSI under 35. So these indicators are giving me a hint that the current price of 0.49 is not the ideal time to get in. Means if I enter now, I can still expect 0.70, 0.73 as a target price. But even before going to chart, it gives a hint that it's not the best time to get in. Now, once
Kamal, sorry disturbing you. Aditya, in the same table, go back to the same screener which you were using, Kamal. You look at UGE, just 2 rows below.
The fourth one, yeah, okay.
Yeah, right. The last price is 2.95. What is the upper Bollinger Band showing? 2.96.
Yeah.
What is Williams showing? 0. Now, when it's showing 0, it's in a overbought position. That means it's going to fall down now. RSI is showing 70.5, which is already in a overbought position. It will be sold off. It will start falling. CCI is showing plus 160. Again, it's an overbought position. It will start falling. All three indicators are showing it's going to fall now. Now, if you open this chart, it will be at the peak of its position just now. But before you open the chart, let me tell you, Williams R will run from minus 100 to 0. Minus 100 being the place where you will actually go and
enter.
Buy. Minus 100 being where you'll actually go and buy. At minus 100 Williams R, RSI will be around 25-30. And CCI will be in minus 125, minus 175, minus 200 plus. So minute CCI is plus 150, 170, RSI is plus minus 10, minus 5, anything nearing 0, it's time for you to liquidate. Out of it. Now if you open the chart of UGE, you will realize you are at the peak of the chart, which I think Kamal had just opened up just now. Kamal, can you open UGE? Look where you are.
Yeah.
Right, now you are at 2.95. Now Kamal, change this chart to a weekly chart and you will see the same effect. Make it weekly. You realizing it, Aditya?
Oh, yes, sir. Yeah, now I get it. So basically, it's in a position wherein you would need to liquidate if you're already in it, or if you are trying to enter, do not enter because it's already in overbought.
Yes.
Okay.
Yes. So the screener will help you to understand that.
Oh, I think that clarifies. Thank you so much.
Your technicals of Williams R, CCI, and RSI will basically tell you whether you are in an overbought position or you are in an oversold position. If you are in an oversold position, it's time for you to enter the stock because the market is all out to sell it. It's time for you to enter with a minimal stock. Now, if you look at Therma, look TRH, which you were just opening the chart. The first red candle when you open the chart on THRM, the last three were red candles. The green candle, what is the RSI there? What is the Williams R there? The last green candle, this one. Look at it.
The RSI is
It's at the peak.
yes.
Williams RSI is at 80 plus.
Oh, which is like your overbought. Okay.
89, 90. Williams are at points -7. Means you're already people are bought now. Now is the time when the selling will happen. And that's exactly what happens now. Second point, look at the price going out of the Bollinger Band. The next day also it went out of the Bollinger Band. The very next day, market has pushed the price back into the Bollinger Band. So if you have to buy Therma, I would buy it at the mid Bollinger Band if I expect it to go bounce back, which would be around 30, 38, 37. That's it, 38. I would buy it over here for a bounce to 0.70 or 0.72 or 0.80 also. Even to 1. Why? Because I'm expecting that mid Bollinger Band at 0.38, which is a 20-day EMA, to be a strong support, first strong support. So 0.38 would be the first strong support, which is also indicative in the candles. You look at the previous resistance around December the 11th, which is the red candle. The wick is at 0.38. At December 11th,
Yeah, that is
December 11th, red candle top wick, this wick, yes. The height is 0.38. You see, now that was the resistance from which it corrected previously. It got taken out on 18th of January or 17th of January. So that now becomes a support. So 0.38 becomes the support to be a good buying target for it. So I would look at 0.38 with a stop of about 0.28 or 0.27 to 0.28. Go higher up. Higher, 28. Yeah, somewhere here or yeah, 27, 28. So that could be a buying spot. 0.38 is the entry, 0.28 is the stop, target of 0.95 or 1.
Oh, yeah. Thank you so much, sir. I think that clarifies my query. Yeah. Thank you.
Can we briefly discuss sense as well?
and for the
You can do that till my internet is on.
Sorry,
I'm having a
Kamal.
bad day of internet today.
Before we discuss sense, sorry, whoever has asked for it. Just one more question. So one more question that I've got Vivek sir and Kamal is: say you said that mid Bollinger Band 38 would be our next entry price. So another question that I've got is: do we wait for it, or do we take, like, instead of taking that risk, do we be in a safe position wherein we see that where it forms the first green candle and then enter? How do we do it?
That can also be another way out, because sometimes it doesn't wait for the mid Bollinger Band to touch. It may just
Okay.
reverse earlier also. But
Okay.
the last 4 candles, the last 4 are red candles. Last 4 are red volume candles. So it will come down to 38 definitely.
Okay, but there might be chances that it might even break that support and fall down as well, right?
There is a high possibility it may break 38, which is the reason why I have told you your stop loss, your next resistance is at 0.28,
Okay.
further at 0.18. 0.28 and then at 0.18.
Okay, got it.
Because it is bouncing back from those levels.
so the stop loss will save here if it continues going further down.
Going further. So you have a 10-cent stop loss on the initial trade in case if you want to save your stop losses. So even if you take 1,000 pieces, 1,000 shares, a 10-cent stop loss will be only $100 stop loss. But if your profit goes up from 0.31, multiply that by 1,000 and you see your profit margins going up.
Okay, so the risk to reward ratio is higher.
Very high.
Got it. Yeah.
Right.
Okay. Yeah. Thank you.
Imagine going from 0.4 to 1 is 0.6 into 1,000 is about $600. Vis-a-vis, I'm giving you $100 stop loss. So 1:6.
Oh, yeah. Correct. The risk to reward ratio is very high. Got it.
right?
Whereas
So
people would work on a 1:1 risk reward ratio.
mm,
An active trader would work on a 1:1, 1:2, 1:3. You're getting a 1:6.
and on this stock which is on uptrend, based on its performance, if you see 1 day or one week, 1 month, sorry, this one,
No, you're looking
this
at
tier,
THRM, this one.
sorry, based on its
Only negative is the weekly performance, which is down by 1%.
right. So on its monthly, 3 months or 6 months, and yearly performance, it has done quite well. So which maybe for me it gives a indication that um, if it has traded well in 6 months, in a year, uh, the company has been doing something which is keeping the market having confidence in the stock and taking its price up, even without even without doing a research on the company or the company news. So based on this, it may not be a accurate uh, judgment, but that is how I try to take a reference out of these numbers. And if it really goes on uptrend, it's 52-week peak of $1, as Vivek sir was mentioning, as a target. That could easily be your target in lesser time compared to a higher price stock. And for this, if you buy at 0.38, you could easily expect 0.76. Means if I were to buy, I would keep a buy at 0.38 and a sell order at 0.76 for major about 50% of my position, without even um, tracking it every day. I'm just sharing of how if I were to trade on this THRM.
Oh, got it. Yeah, thanks for that, Kamal.
Right, and the remaining which I'll have will be for higher targets above 0.76, because if I sell at 0.76, I have already taken out my investment. If I sell even 50% of my position, and I'm saying this, which might be repetition to Vivek sir, because Vivek sir has taught all this. Uh, so I'm getting better learning from Vivek sir.
I always make a statement that try and take away your cash from the table as early as possible, so that what is left with you is your free stock. And when it is a free stock, even if it turns to dust, it won't bother you. So if Kamal is saying 50, I would say take off 60%, because if you sell 60%, you have taken your interest cost and your finance cost also out with a marginal profit. So balance is actually your free profit, which you can encash at whatever price you get it at. Even if it is 1 cent, that is still your free profits, because you already earned your 5% profit margin on the balance, 5 or 10% profits. So if you're doubling in a short time of about a week or two, take 60% off of your holding, carry the balance as free goods.
Right. And before going to Suns, I wanted to share one more thing, which I usually do. Mm, may not be relevant for everyone, but still. So I have a habit of buying the stocks on TSX and TSXV on my Wealthsimple Trade. I have two accounts, one personal and another TFSA. So when I'm buying the stock for the first time, uh, I'm not entering in bigger position. So I try to enter on my personal account, because I want to gain confidence on this stock as well. So in some cases, not always, but in some cases, I first, if I'm not fully confident about the stock, then I buy in my personal account. If gain confidence on that stock, then I buy in my TFSA account, which I want to hold for long. and in that case I can buy in bigger quantity. So it basically point what I was saying, trying to say is, based on the confidence, I also choose which account I am going to buy a stock and how much quantity. If I'm less confident, then I'm not buying with my TFSA, because I don't want to trade frequently with my TFSA account and prefer my non-registered account. And if I'm confident with a stock that I want to hold it for long term, irrespective of what happens after I buy, whether it goes down or up, I'm buying in my TFSA after gaining confidence with a bigger quantity.